Is bouncing back, and we are going to discuss the weather in Brazil and the United States right here on Connected Farmer, your channel to keep you up to date with the latest trends in agriculture and livestock. So we have Jerry Gidel back to Connected Farmer, and Jerry, let's start right on the weather, and then we discuss the markets. So we had a week without any rainfall over the corn crops in the state of Paraná in Brazil, and a lot of dryness in the middle of the United States.
Yes, both of them. Not that we really were too extremely hot temperatures in the Midwest in the U.S., but definitely forecasting temperatures even here in northern Illinois to get to 90s by mid next week. So that's always an interesting one. Not to say that it's really going to have short-term damage to a crop, because it's at this point, probably when I was on my drive out last weekend in across the state, we were talking about 2 to 4 inches, maybe as much as 5-inch tall pieces of corn out there. And so, but the key thing is it's already coming in the U.S. with 90 degrees. And you're exactly right about Paranon. Dryness there and some heat at this point in the 90s down there. That's not so great for the pollination on corn. That may have been a combination, part of the reason it was going on with the streak in corn, because corn was really the star of the week here, to say the least. Despite the fact that we had the U.S. corn plantings clear up at 82% last week, and the interesting twist on it is, though, the North Dakota, which has been projected to have 2 million, maybe 2.2 million worth of plantings this year, was only 20% or 25% planted. So we're probably going to see some of that corn put in to prevent plantings. And so, or it could actually be switched over to beans. And maybe that's part of the reason why beans were a little lackluster this week, with the assumption that maybe some of the bean acres or some of the corn acres here weren't going to get planted and switched over. But right now, at least the corn and the excitement there. And at this juncture in South Brazil, by the way, the U.S. went ahead and went up to 130 million metric tons on their estimate here earlier this month. I'm still very cautious about that we're going to have much above this 122, 125, 124, 125 number for Brazil, primarily by just what you pointed out about Paranon in Brazil. And of course, I'm not sure what we're going to get out of Argentina. Argentina's numbers continue to be kind of surprising to me, that they're still willing to hang in there at 35, 37 million metric tons. There hasn't been a lot of rain till this week. There was some rains in Argentina this week, but way too late for corn and soybeans.
Yes, and for the markets, we saw the corn rebounding, but it seems that the market is ignoring the news that came out of China that the cattle producers there are using a lot more wheat instead of corn.
Yes. Well, the livestock producers over there are utilizing what's available to them, like they tend to use here. Unfortunately, we're not going to be able to use a lot of wheat in the plains this year during harvest either. So I think that's part of the reason why that the corn market in the U.S., and that's the one that's really there, the impact of the wheat feedings is part of the reason why we're getting, interestingly enough, the cancellations here again this week. We've had like three out of 4 weeks, I should say, where we've had small cancellations in our weekly export sales, primarily because of the Chinese that bought pretty substantial amounts. They're up about 750, 800,000 tons of cancellations, and they had 272,000 ton cancellation that was part of this week's numbers that were down. Just not very much. It's 3 or 4 million. Other people were buyers in the corn market to compensate for it. But interestingly enough, here is I think that the feed demand in the U.S. on corn is going to be strong, and also ethanol usage I think is going to start picking up here. This week's ethanol numbers didn't see a jump in actual output of utilization of corn and that, but they had a big jump down or a big decline in stocks, and so I think that suggests we're going to see a pickup in that demand. I think what they were doing is going ahead and moving the stocks that they'd already produced at higher prices and got that moving along into the ethanol world, into the actual gasoline situation going on, because this is from here through till mid to late July is really a very, very strong period for U.S. gasoline demand and usually higher prices.
Yes, and also from the US point of view for US farmers, we had some macroeconomic data today showing that the economy in the US is stronger than expected, and therefore the Federal Reserve might increase rates next month.
Well, that right now that's part of the interesting scenario. I think you're right about the economic side of things. I think the other thing that probably I don't know if it came out before the stock market was finished today, but they've been negotiating this whole scenario about the debt ceiling and they had a June 1 date for that. But then late this afternoon, going into the weekend here on Friday, I should say, Secretary Yellen, the Treasury Secretary, said, well, looks like we're going to be able to make it to the June 5th or 6th. So that gave a little bit of reprieve here and that. And I kind of feel like that right now, both sides are dancing around the ideas of what they think they have to have, yet they both say that they don't want it to default. But it's interesting, all these people are talking about disaster situations, and that we've had this situation come up at least 3 or 4 times where it actually didn't get settled right away in the last 10 years. And the world didn't fall apart as madly as they're talking about now, but maybe things are a different situation than it was. But in general, it definitely wouldn't be good for Social Security and military pay and things like that if we did not have this whole thing settled on the debt ceiling that's been going on here for at least the last couple of weeks.
Yes, and what is surprising that even though interest rates have increased over the last few months, the agribusinesses like John Deere are doing pretty well.
Yeah, well, agriculture, I think, built up quite a war chest in many places. Not so much maybe in the chickens and the pork people at this point, and probably not the wheat because they haven't had the kind of crops that they'd like to see last year and now this year from there. But corn and soybean producers in the Midwest have had 2 or 3 years of very good prices, and that it makes it tough to make decisions on new crop prices and that. And to some extent, I think there's still a lot of optimism about El Nino arriving and La Nina waning, that all of a sudden we're going to have fantastic yields in the U.S. Right at this point, I think there's still some issues here as about the West Coast PDO, I should say, a big blocking scenario off the West Coast and it's splitting our jet stream, and that's part of the reason why that I think that the weather people here in the U.S. are getting more and more concerned about the fact that there could be a ridge build up west of Denver, or excuse me, east of Denver, out of the plains here, and cause some additional weather problems in the coming season. But it's still a little early in the growing season for that to be totally there. But it's definitely starting to get more and more commentary within the weather community.
And what are you watching next week?
Well, it definitely going to see the continuance of the weather pattern we're in right now. They're kind of projecting things through a week from now. They've got 10-day forecasts, but most people, once you get past 7 or 8 days out there, it's always a little bit of a crapshoot. And I guarantee you that one of the classics in the commodity world is long weekends and holiday weekends and things like that. You go with this kind of bounce we've had in the going into Friday, basically because of the uncertainty of the weather forecast as more than anything else in the U.S. and what's going on, particularly in some parts of South America there in southern Brazil and Argentina, is such that we've got the reaction here. The one thing is kind of positive here on the technical is that when we fell apart here after the May numbers, and that we broke down below $6 on spot July, and today we moved through that period of that area and ended up closing above it. I think to some extent this $5.95 to $6 area is going to now be a little bit of a support like it maybe was before, and now we'll see if we're going to watch things in that area. But weather in the U.S. is going to be important, and we'll continue to watch what kind of results we get from Argentina and southern Brazil's crop prospects here as they inch closer to finalizing their crops, particularly in Argentina. I think that harvest down there is getting close to the 75-80% down on the beans. Corn, they're still a little further out on that one. And the same thing in Brazil is the harvest is just still a couple 3 weeks away, and it still stretches on all the way through all of July. So there's still lots of time out here to see what kind of yields we do get out of that area. And of course, we're going to continue to have the Black Sea situation in the backside of this thing. The Russians this week playing more games, not letting boats go to certain ports, continuing to demand that they want everything. They don't like the alternatives versus their own bank involved with SWIFT, things like that. So we're going to continue to play all kinds of different angles on the Black Sea situation going forward. Right now, at least, though, the world isn't getting as many bushels out of Ukraine as they used to.
All right. Thank you very much, sir.
You bet. You have an enjoyable holiday weekend, and we'll be back at it next week.